Zak Mir with a weekend look at the Bitcoin Treasury Strategy Brigade. It is Saturday, the 28th of June, and one of those situations where, in many cases, it's one has to paraphrase Windsor Davis. Oh dear, how sad. Never mind in terms of what we are seeing at the moment. At least in the case of Anemoi, we've managed to hold a resistance level around 1 3/4 pence, just above resistance on the way up, and therefore hopefully there'll be no end of day close back below 1 3/4 ahead of at least a move back to 3 pence as a best case initial scenario target. RSI is still above neutral 50, so that's why we're regarding the technical glass here as being half full rather than half empty, even though, has to be admitted, we're still miles above the area of the 50 and 200-day moving averages. So actually, in that way, the shares are still outperforming the spike to 5 pence, notwithstanding. Moving on to probably one of the stocks which has done the best in terms of the pullback that we've had from the highs midweek on the Bitcoin Treasury Strategy Brigade. Here we've got Bluebird Mining Ventures. The call here was that we could get to 2.2 pence by the end of next month. We got near, not too bad, around the 1.9 pence area, 1.97. And we're back now, but the old target there around 1.05 hopefully will hold, and we can stay above that we still have a chance of making it back up to 2.2 pence by the end of next month. The reason for the relative optimism is the way that the 50 and 200-day lines rising, so they're rising to a golden cross, which will probably happen in the next week or so, and that is a positive in terms of the price action. The other point to note is that it was spotted almost at the beginning that this was a bear trap island reversal, one of our favorite setups, and it actually proved to be the case. The other point, actually, with reference to this stock and many of the other ones, is that even though you might suggest that the bubble has burst here, the siren voices weren't saying anything at zero point 0.4 or zero point 0.5 when we had the technical buy here at Bluebird, and people could have 3 or 4 or 5x their money. So it's only strange that they only come into play after the boat has been missed, and to say, and the shares have come down to say how terrible everything is now. So a bit of spite, I think, coming in there, and envy perhaps as well. Moving on to Catenai, which is the latest of the BTS brigade. Here we saw the company raise, I think, 1.6 million at 0.35, so the shares holding up relatively well. The shares are in a mildly descending price channel there, 0.3 to 0.55, the range there, waiting for an end-of-day close back above that 50-day line, 0.4 pence, in order to get back up to 0.55 pence, ideally by the end of next month. One of the big winners in the recent past has been Coincilium. So you can sort of argue it's the second only to Smarter Web. Here, the situation is that we really have had the sort of grand old Duke of York pattern. The shares were called higher here from about 4 or 5 pence, and they have obviously, from that level, they did 20x and more. So it's surprising that, as I said, there wasn't anyone saying, apart from the technicals here, what a great buy these shares are at those lower levels. They only come into play once the shares have come back down again. Current situation is that still looking at 20 pence as being the base, so 20, 30 and 50 pence probably the levels in the near term. I think to get back into business properly, we're looking at an end of day close back above 30 to take us back to 50. If that can happen, we have seen the RSI bounce at neutral 50, which can be a buy signal. So hopefully that is the situation for the shares in terms of next week. The share below 15 pence, and we bounced well above the rising 50-day line. So that is quite a strong signal. I think there's something presentation coming from the company on Monday, so maybe that's a factor in the shares rebounding. Moving on to Cel AI, and here stock which had a wonderful move there at the end of May. Current situation is that we've got the 50-day moving average in play, and we bounced back above it, so it's a bear trap rebound from below the 50-day line there at 0.41. While we're above that, looking with the shares, I suppose, to get back up to the low 50s there, best case probably up to 0.6 if we can get a recovery next week, but that's only while we're above the 50-day line. You can see the RSI has fallen below neutral 50, so slightly vulnerable, especially after that unfilled gap to the downside that we had on Friday, even though that has been tempered by the basically a hammer candle rebound for the shares. Moving on to Mendell Helium, where the company tried to get on the bandwagon. You can see the bandwagon worked very well for one day, and then the bandwagon left the shares probably in a worse state than they were before they started that strategy. But at least we are back still above the 50-day line there, around the 2.5 pence level. One can argue that if there are any dips towards that 50-day line, may be a buy opportunity after the rug pull that we've had, a horrific rug pull, and maybe you get moved back to sort of the Thursday peak around 3.5 pence while we're above the 50-day line at 2.6 pence. But that's a horrible reversal that we've had there. Panther Metals was going well even before it decided that it wanted to get into BTS. And what's interesting here is that the shares are back at our second target there at 69 pence. I'd like to see the shares hold above the latest gap there, the recent gap there at 64 pence. Above that, maybe there's a chance of a bit of a retracement back towards the 80 pence area, but has to be admitted the minimum we'll probably get away with is a test of the gap floor there at 65 pence before the shares turn back around. We've got the 200-day line there at 67 pence, but probably that gap there, the magnet for anybody who wants to have a go at buying into that situation. On to Priority, where it was noticed and hoped that the shares would be able to get back above their 200-day moving average at 8 pence for the first time since they came to market at the end of December. We stayed there for about a day and a half before falling down. Current situation, we're in this sort of range between 5.6 pence and 7.8 pence. It looks like a bear flag, so it looks like as though the shares want to head back down to that 50-day line at 4.1 pence, but hopefully they could stay above that spike that we had back at the end of May. And only an end of day close back below that spike at 5.5 pence would suggest that the retracement from 10 pence is not fully over. So there is hope there on that situation. The big one, of course, is the Smarter Web, where didn't see anybody suggesting that the shares were a buy at 10 or 15 pence, or anyone saying that the shares could go to £5. That was only something that we had to hear on a technical basis. And it's amazing how all the way up people were saying that the shares were a sell, and all the way down they're saying the shares are a sell. But what is key now is that if you are short, you would have been looking to probably buy back at that intraday low, the 197 from back on the 24th of June. We have a bear trap rebound from back from below that, which is interesting. And really, we need to see that hold. If we have an end day close back below 197, then the risk is a move to the floor of that channel there at around £1.45. And I suppose if you are a fan of the shares and the whole idea, a retracement from £6 plus down to 145 might be an opportunity. Below 145, the next level down is the 50-day moving average around 105. But at this stage, it would be surprising, I think, if we went lower than that 50-day line. You can see other stocks have not gone below their 50-day line yet, so that may be a point of interest. On the upside, at this stage, even the support there of £2.40 from earlier this week would be a reasonable upside from current levels. Moving along to Tao Alpha, which really was one of the heroes of the recent past. A great moves here. Unfortunately, it was a bit of a two-day wonder in terms of that move to the top of the channel there, 26 pence. Current situations that were actually even below the nominal floor of the channel there at 5.8 pence. The risk now is that the shares, if they fall below the recent support around 4.5 pence, could dive towards the 50-day line near 1.75. But I suppose if you look at the analogous position of other stocks, then 2 to 2.5 is probably the worst here if we do break that below 4.75. Tiger Royalties didn't have as big a rally as the other ones, some of the other ones at least, but what's interesting here is that we've held reasonably well, even though obviously there was a sharp retreat from that spike. We're back there at the second target there around 0.34. Ideally, we can hold this area and then head back to zero point 0.5 maybe by the end of next month. Ideally as well, there's no end of day close back below Friday's support there at zero point 0.3 pence. Otherwise, we're looking at 0.25, the first target that we had there. Moving along to a company that changed its name to Vaultz Capital, and here the former Helium Ventures back down to the second target. Well, it bounced off the second target there, which was around the 12 pence level, above 12 pence. Probably looking for the shares to at least get back to recent resistance at 27 pence, upper 20s, as a best case scenario target by the end of next month. But the key, obviously, is holding that 12 pence area and holding well above the 50-day line, which is still quite a long way down there at 8.5 pence. Finishing off with Binance, or Vinanz, in fact, was the proper name. And here we managed to break many targets there on the upside. The second one there was 40, I'm looking at 47. And then finally, we were running out of, it was like a sort of bicycle wheel of spokes, 58 pence, and we even went through that. But back to reality here, the ideal scenario is that we stay above the first major target there at 27 pence and then head back to 40 pence by the end of next month. But that's assuming that the dip that we had on Thursday is the low of the move. That sort of ties in with the old January resistance around 22 pence. So old resistance becoming new support and staying above 22 pence would be a nice scenario for that stock. That's it for me today. More updates on the normal bulletin board heroes soon.